Alrighty, folks. Happy Saturday. It's your boy Stas here. Cheers, by the way, guys. Welcome back to another video. I appreciate all of you for tuning in as always. And like you saw in the title, we have 5 oversold stocks to break down today. So let's do it. We're going to break down the charts, some earnings, as some of these companies just reported earnings. And we're going to break down my plan, the whole 9 yards, what I'm looking to do. But first, hit the like button. Do not forget to subscribe. And guys, come on, get your 30 stocks from Moomoo. Open up your account using that link down below. Fund it with at least $100. You get 5 free stocks. Fund it with at least $2,000. Get this, guys. You get 25 more stocks, and your uninvested cash now will earn up to 8.1% APY. So, guys, what are you waiting for? The clock's ticking. Use that link down below or go to stasurfest.com/Moomoo. And with that being said, cheers, guys. Let's get into it. So, man, we have 5 stocks to cover today, all of which are pretty beaten down, some more than others. And this comes after a red day for the most part for the stock market yesterday. Well, actually, let me not say that. It looks like here the S&P broke even. QQQ went up about 0.4%, but I'm pretty sure they were down earlier in the day yesterday. Please forgive me if I'm wrong. I was actually at the Eagles parade all day yesterday, so I wasn't too in tune with the market yesterday, but I looked a little bit after the markets closed. But yeah, I mean, we had some red, had some green, QQQ up a little bit, not bad, but the Dow went down 0.4%. Russell went down on the day. So yeah, there are a bunch of stocks now in this market, which it's been volatile, let's be honest, this entire year. I mean, it's been all over the place. There are some stocks now that are pretty oversold. Let's get into it, guys. Let's get into it. So number 1 is ticker symbol DVA, which is Davita. You guys know Davita. Buffett owns this stock, right? And Davita went down 11% after earnings. You guys can see it went down $20 yesterday on Friday, down to $157 after just hitting 180 literally about 2 weeks ago. So we are down now about 14% in about 2 weeks while we're holding the uptrend. You guys see right here, we are holding an uptrend as we're down 11%, which is a good sign. That's a good sign here in the very short term, and obviously we're super oversold, or else the stock wouldn't be in this video, right? The RSI is pretty beaten up here on the 4-hour time frame, and yes, we are under the 180 SMA and well under the 50 SMA here on the 4-hour chart, but again, we're still holding an uptrend. And let's see if the dust settles, or once the dust settles after earnings here, they're fresh, we just got them. Let's see if we get this rebound, right? That's kind of what I'm waiting for here on DVA. And the company, they double beat, guys. EPS adjusted for Q4 came in at $2.24 versus $2.14 expected on sales of $3.29 billion versus $3.27 billion expected. So not bad. Double beat, but I guess the reason why we're selling off here is because of adjusted EPS guidance for the full year. Full year 25 EPS, they're guiding $10.20 to $11.30 versus the $11.25 expected. So the lower end of that range is a lot under the expectation here, but the upper end of the range is above the expectation. And keep in mind, guys, as the year progresses, they can always adjust the guidance. It's not like, oh, they give guidance and that's what it is for the next year. They can always adjust it. So the stock is selling off, I think, a little bit too much. Looks like, actually, wait, Buffett sold a little bit of the stock, $36 million. All right. I mean, for Buffett, that's nothing. But he did sell a little bit of it around or probably before this earnings, but he still owns a big big position. And if I remember correctly, I mean, I made that top 10 Warren Buffett stocks video about a week ago. This is in his top 10 still, guys. Still a big holding for Buffett. So I think it's oversold. I think we'll get a rebound. I could be wrong. But that's what I'm thinking here in the short term on DVA. And let me pop up Google for you guys, stock 2, which I actually bought the dip. I bought the dip about a week ago after the company reported earnings and after the company, or the stock, shall I say, saw a beatdown. So we hit 211. I think that was right after earnings. We hit 211, and now we're at 186. So we're down about 12%. We are in correction territory right now on Google. And for me, guys, whenever Google gets down 10, 20% from recent highs, I don't always do this with every stock, but Google, with it being one of my top holdings, I want to own it for years. I add to it. I dollar cost average when it falls 10, 20% in most scenarios, right? If Google was ridiculously overvalued, no, I wouldn't do that. I would just hold on to what I got. But I don't think it's overvalued here, guys. I still think there's some value here. So that's why I bought more. That's why I'm dollar cost averaging. I don't do that with every stock if it falls 10, 20%. But if it's a core holding, I'm holding it long term, it's a solid value, yes, I will average in. But if Google was like ridiculously overvalued, like I said, I wouldn't add more here. But I did. I bought more here at about $190. Now we're down to 186. I am down a little bit on those shares I just bought, but it's all good, man. I'm holding long term, and even as a trade, this looks really good here, guys. You know, as a swing trade, I think there is a good chance we bounce back here on Google, right? We're holding an uptrend. We're at the bottom of this channel. Buyers are slowly coming in. So let's see, 180, 185. This could very well be a bounce back spot for Google, but if it falls through 180 into the 170s in the short term, that could be a different story. So Google looking pretty good on the charts. Earnings were solid. I don't think this dip will last much longer. I could be wrong, though, guys. Please do your own research. Next stock, number 3, Marriott International, ticker symbol MAR. You guys know Marriott, or at least I hope you know what Marriott is, right? Hotels, right? Hospitality in that industry. And this stock is down about $25 from highs, all while holding an uptrend here. We're down about 8-9%. And this is after the company reported earnings. But it looks like here a lot of the analysts have it as a hold, a buy. Some have it as a neutral, which is interesting there. So Marriott reported earnings per share on an adjusted basis of $2.45 versus $2.38 expected on sales of $6.42 billion versus $6.37 billion. So a double beat for Marriott International. And they see 2025 adjusted EBITDA of $5.29 to $5.43 billion. Pretty good. It looks like here the reason why the stock's selling off is because of guidance. EPS guidance for Q1 is a little soft compared to estimates. Same for the full year. But like I said with Davita, of course, that could always be adjusted in the next couple of quarters. But for now, it's a bit soft guidance, right? And that's why we're seeing the sell-off, but we're holding an uptrend. And it seems like MAR, each time it's pulled down over the last couple of months, right, buyers have come in and bought the dip. Now that we're a bit oversold, right, at the bottom of this trend line on the 4-hour chart, that's kind of what I'm waiting for. Let's see if buyers come in on MAR at about 280, 285, maybe for a move back towards 300 plus. Now, before we go over 4 and 5, stock number 4 and 5, make sure you guys join my email list. Very important. It's free, and I send out my top stocks weekly right to your email, right to your inbox. No spam, no BS, none of that. Just straight up value, no credit card information, guys. All you have to do is put your first name and your email address using that link down below, just like that, and it takes, 10 seconds? So, guys, make sure to get in there. Cheers to that. I appreciate all your support, as always. And, stock 4 and 5, Lululemon, which, funny enough, I actually just got a couple shirts from Lululemon. I freaking love Lululemon, guys. Their clothing is phenomenal. I'm not a huge stylish guy. I'm not one of these fancy, gotta always have new outfits. Quite the opposite, quite frankly, for me. But I do love comfortable, sleek-looking clothing, basic-looking clothing at a decent price that lasts a while. And that's exactly what Lulu is for me. I mean, I go there, buy a couple t-shirts. They're like $40-$50. A long sleeve is like $40-$50 as well. Get a couple of those, and I'm feeling good, man. And it's great quality clothing, but the stock is getting nailed. And this stock, guys, I'm not sure if you remember, but it was one of the worst S&P performers like 6 to 8 months ago. We covered this, right? The stock was down. You guys remember we were covering some of the worst performing S&P stocks. Lulu was in there at the time. I'm pretty sure Ulta was in there at the time. And, man, I should have bought Lulu. Let's just say that. I should have bought Lulu. I didn't. I was watching it to see if it goes lower. It really, I guess it kind of did go lower at the time, but then it rebounded now to almost $400. We hit $420 a couple weeks ago. Now we're at $360. We're pretty oversold, in my opinion. And this is not after earnings came out or anything like that. I'm pretty sure we got some news about a competitor. Lulu down over 6%, on pace for largest percent decrease since July, blah, blah, blah. Looks like Lulu Athletica underperforms competitors. Yeah, that's the thing with Lulu, man, and Nike. Both of these companies are struggling in terms of, really innovating to the next level, and a lot of competitors are coming. That's the reality, and that's why I was actually nervous to buy the stock a couple months ago, and I don't regret it, honestly, because it was a sound decision at the time. I was looking at Lulu, I was like, I love the product, I love the brand, but that doesn't mean I should buy the stock, and that's something I've preached so much here on the channel, right? Just because you like a product doesn't mean you go buy the stock. So I understood what was going on with Lulu, competition, growth slowing down, and innovation slowing down a little bit. Same thing with Nike, and that's why I'm avoiding the stocks, but actually, it's funny, I own a lot of the products, right? It's funny. And when I say I'm avoiding the stocks, I mean as a long-term investment. Let me say that. Let me make that clear. As a trade, yeah, I'm looking at it. That's why it's in this video, guys. I'm looking at it as a trade, as it is very beaten up here, and I feel like a rebound could be around the corner. But little advice there, not financial advice, but a little advice, guys. Just because you like a product does not mean you buy the stock. I mean, if I bought the stocks of the products I like, I wouldn't be doing that great in the stock market. Let's just say that, man. I wouldn't be doing that great. Sure, I do own stocks that I love the products as well, but, not all of them. That's not necessarily how investing, how making money in the stock market works, right? What do you guys think about that? Let me know your thoughts in the comments. But yeah, Coinbase is number 5. Which it's pretty oversold. We're down about $75 a share from the recent highs, or about 21%. In other words, we're in a bear market. And in my eyes, guys, Coinbase has been consolidating the last couple of months. At this point, 2 months, a couple of weeks here, we've been consolidating at about 260, 75 in that ballpark. And to me, man, I think a rebound is coming. Bitcoin's a bit suppressed right now. The crypto market's suppressed, but I don't necessarily think the run in crypto is over. I just feel like Trump's in the new president's in. The market's kind of feeling it out a little bit. There's some uncertainty with tariffs, with China, geopolitical tensions. What's Trump going to do? He's a little bit unpredictable, So there's a little bit of uncertainty in the short term in the crypto market and stocks, right? We've been sideways for a little bit here, but I don't think that's going to last. I think as this year progresses, we'll start to break out again. That's my prediction. And I think Coinbase will benefit from that. I think this could easily be a $300 plus stock again, not too far away from now. And that's kind of it on Coinbase. And wait, did they just report earnings? I just realized. Wait a second. Hold on. Yeah, yesterday or 2 days ago, Coinbase reported $4.68 earnings per share, which crushed the $1.81 expected. I mean, guys, holy smokes. And sales, where are the sales at? $2.27 billion, which I'm assuming that beat, the $1.83 billion expected. So very good numbers from Coinbase. We just got to get some momentum to start building up again. We actually just had an 8% red day after those earnings, which is pretty surprising. Honestly, we'll see what we do here in this range, and if we start breaking back out over 280, I think that'd be a good spot. So I'm gonna set my alert at $280 per share. Mark is at or above here on Coinbase. And that's a wrap, guys. That's a wrap for this video. Make sure to smash the like button. Do not forget to subscribe. We're on the road to 100K subs. Make sure to subscribe here, guys, and get your 30 stocks from Moomoo. Open up your account. Deposit at least $100. You get 5 stocks. Deposit at least $2,000. You get 25 more stocks. That's 30 free stocks, guys, and your uninvested cash now will earn up to 8.1% APY. Simply use that link down below, guys, or go to stocksurfs.com/Moomoo. And with that being said, cheers. I'll catch you in the next video.